Just do a quick recap.
All right, yeah. So I'll go over that again. All right, so this is a pennant. Their continuation patterns verified by a flagpole. Then we see continuation. Then wait for our volume to break out. Our volume to confirm. Then we see a breakout. All right, we see that Tesla went down, went in some consolidation. Then once it broke out, you see that drop. Another one, BA, flagpoles at the end, consolidation. We're expecting another breakout. Now we have flags. So flags are another continuation pattern. All right. First we have our initial move. So this is going to the downside. Then we have a consolidation channel. Then how do we trade this? We'll wait for the break of that channel, and we'll confirm it by volume. All right. So I'm giving some examples on that one. So we have Tesla. We have our flagpole right here. Then we see that when we see bull flags, right, we're seeing that the move's going all the way up, and we see a slight dip, right? So so a lot of people they'll see this, right, and then if they see this first candle, what do you think they're thinking once they see this first red candle? All right, we're gonna have a reversal, right? But no, you never get in. Yeah, you wait to see. Then you see this candle, and then you see this candle. Well, who knows what type of candle this is? Anyone knows what type of candle this is?
Is that a hammer?
That's a hammer, right? And hammers are bullish candles, right? So I would see this candle, and I'll see this next one, and we see that the stock isn't really dropping. It's consolidating. There's no buyers are not getting a hold of it, and sellers are not getting a hold of it. So we see this slight dip. Then later on, we saw that Tesla broke out and went out, and kept going up. Right? Next we have AMD. So we have our initial move, this drop. Then we saw a slight. So this is a bull flag, and this is a bear flag. So we see this slight drop. Right? This is on the 1 hour too. So we see a slight drop. We saw price go up for a little, right? Then we saw that same drop again, right? So what do we see here on every one of these drops? We have our first move, volume. Once it broke out on that second candle, what can we use to confirm that? Volume again. All right, so that's why I always say use volume to confirm your positions. Then we have Facebook, another bull flag. We see our first move, then we see it get caught in this channel, and then you see that once it broke out, we use our volume confirmation. It's bigger than this one, and we expected it to blow.
You also have a crossover on the stochastic slow.
Yeah, you could. Oh, right. So that's another confirmation. So the more confirmations you have, the better it is to assert your position. So now one question I have: what's the difference between a flag and a pennant? Good answer this one. $5. Tell me the difference between a flag and a pennant.
Yeah, I was gonna ask that question. I was like, they kind of look the same.
Okay, so I'm gonna explain that to you. So I'm gonna tell you the secret. So the main difference between a flag and a pennant is the trend lines, right? So we have this. When we have this is a pennant. These two are pennants, right? And what do we see about these trend lines? The trend lines connect, right? They're squeezing at the end. When we see pennants and when we see flags, they're in channels, right? So we have a flat support line and a flat resistance line, and it's a flat support line. Over here we see a descending resistance line and an ascending support line. So that's the main difference between a flag and a pennant. So in our flags, we're seeing the consolidation happen in channels, right? Like this. This is a channel. You see that the tips are not connecting. Channel. And for pennants, we see that at the end, we're getting tips that are connecting. All right? You guys get that?
Yes, sir.
All right.
Yeah.
I'll move on to the next one. If I'm going too fast, stop me. All right, because I do talk fast.
So my fault, bro. So just explain the difference one more time for me. I'm gotta write that shit down.
Between a flag and a pennant. All right, so flags, it's all about what happens in the consolidation period, right? So somebody has a question. Exactly. So the pennant forms a triangle and the flag is a rectangle. So where the consolidation happens is what matters. When we see flags, we see the consolidation happening in channels. And once we see pennants, we see the consolidation happens in triangles, basically.
Okay,
And all right. And one thing, flags are not flags and pennants are not pennants if there's not an initial move. So for it to be called a flag, you would need a previous move to be happening. So this big jump into this consolidation, that's what makes it a flag. You can't just have like the stock stay flat and it goes down a little because we don't know if that's a bear flag. It could just be a descending triangle, ascending triangle. So for it to be a flag or a pennant, we must see that flagpole happening for us to be calling it a flag and a pennant. All right, next we have symmetrical triangles. So these triangles are pretty confusing. These do they do require patience and strict trader discipline not to get faked out. So these are also considered continuation patterns, but a lot of times they do break out in any direction. That's why I say you have to wait for the initial move. There's no initial move on this. It's just it just forms out of nowhere. You have that, and then they just form out of nowhere. So we have that resistance line going down, support line going up, and it's equal. It's an equal triangle, but there's no move. See right here, the stock was flat, and then we just have it form a symmetric triangle. So the breakouts can happen any way. So there's no bearish symmetrical triangle or bullish symmetrical triangle. You just have to wait to see where the stock goes. Symmetrical triangles. And I see symmetrical triangles happen a lot on support or resistance lines. So for these, you have to be patient with these because you can get faked out. Oh, where's my picture? I put a picture. I'll just go into Thinkorswim after and show you guys. So yeah, those are symmetrical triangles. You guys know symmetrical triangles, right? They're both pretty equal. So when you look at that, look for a breakout in any direction. Now for ascending and descending triangles. So ascending and descending triangles are mostly continuation patterns, right? So we're looking for that initial move, like another flagpole, but with the consolidation period now, we have a flat support or resistance line, and we have our other trend line going in the direction we're looking for. So for example, this is an ascending triangle, right? So we have our move, it's going up, but then we have our sellers. Our sellers are really heavy right here, but the buyers are not giving up. They're still pushing the stock price up and up and up. So we see that until we get to this squeeze at the end, and finally, sellers let go and buyers take in. So what makes an ascending and descending triangles, those we're looking for is flat support and resistance lines. That's what makes an ascending and descending triangle. Wait for the break of the triangle and confirm with volume. Ascending and descending triangles also can break in any direction. You also have to wait. That's why I always say wait for the volume. Don't get trigger happy and press your thumbs in buyer position when you don't have that confirmation yet. So always wait for confirmation. Wait for the break of the triangle and confirm it with volume. So I'm gonna give you an example what I mean that sometimes these triangles they're not always what they see. So if we're looking at this, we're thinking, okay, we're seeing a breakout. We're gonna see a breakout to the upside. But no, let me show you. I'm gonna give you guys an example. So last week I called out Zoom, and I said we have an ascending triangle. We have our big move. We have this move going up from down here. You see a big jump, and we're thinking, okay, if we can break this 301.62, we'll blow. But what happens? Gets, and doesn't go. It doesn't keep going. This triangle. This is an odd triangle. This is an ascending triangle on a descending move. So sometimes you see some triangles that are pretty weird, but you guys just wait for the breakout. Just wait for it to break the triangle to make your move. Another one, we have we have, what stock is this? This is Facebook. So Facebook, we get in this descending triangle, and we're thinking, okay, we're in this descending triangle, we're gonna go down to the downside. No, we broke out this triangle going to the upside. So that's why I always say, wait for the moves to fully happen. You know, wait for that candle break, and then get into your position, right? Because you can already have the mindset, okay, this is gonna be this is a bullish pattern. But what happens? It reverses. It doesn't go that way. So it's always don't, you can see a pattern, but don't assume, okay, it's bullish, we're gonna keep it that way, I'm getting the position. Because you could have got faked out right here if you didn't wait. You see, the guy, I don't know your name, but whoever asked that question, how would you trade this? See, this is why you wait for the candle after. Because imagine how many people got into this candle right here and it got faked out for it to go all the way down to 298. That's why I always like to say, wait for that candle to break out of the triangle so you can get in your position. We have a question. Any questions on that? Yeah, wait for the candle and volume. Any questions on that?
Nah, bro.
All right. Now we're gonna go into channels. All right. Channels. It's not a pennant or a flag or none of that or a triangle. We have channels. So channels are areas of tight consolidation. So when I say that, it's where buyers and sellers have control over the stock, right? They're both once a stock gets up here, sellers are ready to sell. Gets up back here, ready to buy. So what are channels useful for? Yeah, the channels are in between the flags in the consolidation. Yeah. So when we see channels on flags, yeah, that's what makes a bull flag a bull flag. We look for the channels. So it helps to identify potential buy and sell points as well as set price targets and stop loss points. So channels are pretty easy to what do you call it, to trade. You can scout this. Once we see up here, you can get put position. Let's get down here, get in buy position, put until it breaks out, right? And these are continuation patterns. So some channels are continuation patterns, some channels are just flat, but it's just these are very easy. You look for where you're gonna see where buyers and sellers are heavy at these channels. So I'm gonna give you guys an example of that. So we have SPY, right? This is a perfect channel. We have stock broke down right here, went up to our resistance line, dropped all the way back down, close to our support line, and just kept doing that the whole day. Just kept going back and forth, back and forth. Then finally we broke out and we dumped when we seen that channel. We have Amazon right now in the little channel, easy on the far, so you could trade this if you wanted to. But yeah, we have stock come down right here, went up, came down back, went back up in our little channel. The channels are very easy to trade. Yeah, they're just very easy to trade. And we have Facebook, another channel. Saw the stock went up here, went back down, then right back up here, and went back down. And if you guys have Thinkorswim, there's a drawing tool that will make channels for you, so you can see it more clearly.
It's not as accurate as if you were to draw it, though.
Right, though.
It doesn't
right.
pick up everything.
Yeah, it's hard when you try to edit it. It doesn't let you edit it sometimes. So once you've seen the channel dying off, you dump. On which one? Go up. Which channel? If you could type that in the chat right quick. On SPY. For this one, right? For the one I'm looking at right now.
Yeah.
All right. Yeah. So I signaled this. I was like, all right. I signaled this in the chat. I said, hold up. So yeah, I said SPY's in a very tight channel. Wait for that. Wait for the break to the upside or the downside, and you will see this. And once we saw a break, it just dumped. It just dumped. So once I saw that channel break, And then I just used it. Once I seen it hit the 9 EMA, I just got my position because it just dumped from that. What makes, is this a flag? What makes this not a flag? From when I said earlier, what makes this not a flag right here?
There's no big movement.
Yeah, so there's no. So yeah, so there isn't a movement that's happening. You see that SPY was flat right here, and it just came up and just went back down. So that's what makes this a channel. There's no initial movement. It just created a channel out of nowhere. Same thing for Facebook. There wasn't any initial movement that caused this channel to happen. It just happened right there. So that's good that you guys see that. That this is a channel, not a bull flag. And that's it. That's pretty simple. If I went too fast, just ask me to go over something because I do talk fast. All right. So if you guys.
I got a question about channels.
Yeah. Let me hear it.
So I was watching the Hypify Trading video, and y'all said so what's the difference between channels and consolidation? Because I've seen like you got the 2 uptrend channels and then a downtrend channel. So is that not consolidation?
So I'm gonna give you consolidation. When we say consolidation, we mean an area where the stock isn't running. You see how the stock keeps bouncing back up and down, up and down, up and down, up and down. That's consolidation. Right here. It goes up, then goes back down. It's in a range. So when we see a range, and the stock isn't really moving, that's consolidation.
If you want to let me be host, I can share my screen and I can show you Roku's past 2 weeks pretty much.
Yeah,
That's
I'm
just straight
do that.
consolidation.
You see that right here? The stock isn't moving. It's you see that, right? That's consolidation. Yeah. Right here, the stock isn't really moving. It's flat. Consolidation. You see right here, there isn't really any movement. Consolidation. Okay. It's gonna take some practice. You're not gonna get it like off rip. You know, it's gonna take like practice, like going back in your charts and looking for areas where. So just look for areas where the stock isn't moving. So if you look for areas where the stock isn't moving, it's consolidation, right? All right.
Yeah. All right.
All right. Any questions or answers? Wait. Okay, go ahead.
Is a channel and the wedge the same thing?
So yeah. So I was gonna go over that, but I don't really look at wedges, but they have the same concept. Channels and wedges have the same concept. You just once you get the concept of channels and triangles just being areas of consolidation and just waiting for the break of that trend line or the break of that support or resistance line, then you're going to be able to get it. But wedges have the same concept of channels, but with wedges you're going to have like this resistance line will be tilting up this way, or this support line will be tilting up this way, but they're not really touching each other. But they have the same concept as channels. We're just waiting for the break to get in our position.
All right, I got a question.
Yeah.
So that indicator at the bottom, the TTM squeeze, what is that indicator?
So okay, I'm not the best one at explaining this, but
All right, you want me to do it then?
Yeah, Kevin explains.
All right, so TTM squeeze, if you want to make me host, I can show everything better too.
I might just make you host, right? Which account are you on?
Hypify.
All right, your host.
Okay. All right, so you see my screen now?
Yes, sir.
Yeah.
Yep.
All right.
Yep.
So TTM squeeze is on the bottom, right? It's this is blue, yellow, and red. So each part is different, right? These blue bars means that the stock is going into bullish momentum, and the light blue is less bullish, while the red is more bearish, and the yellow is less bearish. And it doesn't show this on the mobile app, but these green circles compared to the red circles mean that it's like good to enter a trade. So like when the circles are red, it's in consolidation and it's not moving. There's no momentum behind the stock. So you see like here, like this whole area, you wouldn't trade it because there's no big moves for you to trade. So like as you can see here, like this is consolidation that he was talking about. How there's just like it couldn't break out either above or below either of these points. And this has been, it did this for 12 days. I mean, after it did it for like another 12 days here.
And once we saw that break of that channel, look how Roku just pumped up. So.
Yeah, we see a break of the channel, as well as good volume, as well as a stochastic slow, and the 9 and 21 EMA, and the TTM squeeze is just like, it just went. And it also broke all-time highs, pretty sure. Yeah. Also, this is another example of the triangles and just like support and resistance lines. So Roku, this is Roku's daily. This top back here is 9-9. I think it was last year. Yeah, this was last year. And you see how it touches the top more than one time. You would draw this line, and then you would trade the breakout. And you can see right here is the breakout. There's a lot more volume compared to the last few weeks as well, or a few days. So you just trade the breakout and volume. See more volume here as well.
And then plus, if you're like on higher time frames, you could use that. Like it works on higher time frames. You would see like where it rejected, and it would be a good way to get into puts. But you would first break out. If it couldn't, it's a good indication. Look how when it hit that first trend line, but the second time it topped, look how it gapped down. See, that's a fat gap right there. So
these were there was no earnings here. I don't think there was may have been news, but it just adds on to, breaking support and resistance. And as soon as we broke it and broke out of all this consolidation, we've seen a massive pump. Just some other like triangles I've seen in the past. Like you see Amazon. This was like a year in the making, maybe more. Started this technically consolidation between 2000 and 1300, and it bounced up between. This on the weekly would be considered a false breakout with the gap up from earnings, and then it ran like the following week, and then it fell back down, hit the bottom bar of that triangle. But then when we finally broke out, we went from 2200, all the way to a run of 2300 or 3200. Like, and if you look at this in the weekly, it's the same thing. Just a simple triangle, easy to draw. Connect the bottom 2 points, connect the top points. Of course, this triangle was drawn when this top one hit and this one hit, before this whole thing, because this is also a time of Corona when it hit hard the market. So that happened. Some triangles that we're currently looking at on the high time frames are Boeing, and you see this, connect the top bars, connect the bottom bars, and to get into this trade, we would either wait for a, break above this line or break below this line for puts. We're also, does anyone have any questions about that?
I had a question about the support and resistance lines.
On which stock was I looking at? Do you know?
No, this one's fine.
Okay.
It's just that I seen that sometimes when you're doing like the support and resistance lines, there would be like a bullish and a bearish candlestick next to each other, but one of them touched the resistance line for, I think that's like Thursday near the end of it, and it's next to two bullish candles, and I'm wondering,
Wait, this one?
yeah, that one.
Yeah. So I remember Thursday we had a massive pump on Boeing in the morning, and then it just like it fell back down.
Oh.
So a lot of people like at least my daily breakout strat is to trade when it gets higher than the pre-market high, and that's what it did the first candle at the open. And technically that doesn't look like anything on the 4-hour because it's just a huge doji, or not doji, it's just a huge wick. So I mean, it just creates another resistance. As you can also see here, it forms a resistance here that just couldn't break out of.
Oh, okay, okay.
So it had trouble, like the buyers had trouble breaking this 180.1, 180.8 actually area, and sellers took over, brought the price back down to 173 within the 4-hour time span. Also, you can ask.
A question. You guys don't use Robinhood, right?
Oh, we do.
Yeah.
I mean, not for charting though. We cannot use Robinhood for charting.
But what do you think would be good for like new traders?
Yeah.
If you're just like looking to like buy and sell your positions, like you could use Robinhood for that, but for charting, like it's impossible to do that on Robinhood.
Yeah.
But like if you're new and you're trying to get the flow of how options and all that stuff work, you could use. I use Robinhood when I
me too.
started. So yeah, we all use Robinhood, but then we just wanted something different. I like day trading, so I just went to swim.
I think Robinhood offers a really good feature on how simple it is to like understand like what calls and puts are,
Yeah.
and like how they're priced, and like if your money goes up or down, like you see it visually. Like it's just a good like learning thing. But if you do use Robinhood, you will need a chart on either Thinkorswim or Trading View.
Kevin, show him the option chain on TOS and
All right.
why it's.
I mean, we use Robinhood and we just get tired of it because it's limited day trades and all that, and also the glitches. So
Yeah.
Robinhood.
So a lot of people get scared from this, but like we're looking at SPY here. A lot of people just get scared from this screen because they're like, what am I looking at? Like, do I need to have years in the market to like understand this? And that's kind of what I thought when I began. Like I looked at the screen, I had no idea what I was looking at. But it's not that hard. On Robinhood, on the top, you see the expiration dates, and that's what all these are. September to October, and then you get all the dates before it. The reason there's more here is because SPY has expiration dates on every other day, pretty much. So say you just want to get into a September 9th contract, and you can also change how many strikes you see. So I like to look at all of them because sometimes I can't get ones that are fully at the money area. So like say if you were doing at the money, you would like only see these. But if you get all, you see every single one. And all these numbers are just like the price of it. This is the implied volatility, as well as how much it changed that day. And then this one is the volume of how many people are in this contract. Then you get some of the Greeks that I like to use.
Yeah, but it just goes to show that Robinhood, if you started with Robinhood first and switching Thinkorswim, it would just be easier because you would just know all this extra stuff.
Yeah, and then you can like utilize it.
Yeah. So, any other questions on flags and pennants and chart patterns?
Or anything at this moment?
So, back like to the Boeing with the
we're looking at Boeing right now.
The hammer right there with the huge upper wick.
Yep.
That's an inverted hammer.
Or inverted hammer. So how you accidentally said doji and then you corrected yourself. What would make it a doji just opening and closing at the same price or close to the same price?
So
show him that. Look at that red candle right there.
This is a doji.
Yeah.
Pretty much. this is kind of a doji. Like, oh, that's Roku.
Just look for where it closes in the middle of that way. Close
Yeah.
to the middle. It's not
So,
at the top and it's not at the bottom. It's like
this is a doji pretty much. It's a bullish doji, but it is a doji. You see the candle within the candle, the price went down and up, and it also like it closed in between them. But the closer the candles open and closes, the more of a doji it is, and the more indecision you find. I wanna find a real doji. Yeah, I mean, like that's kind of a doji. There's also different kinds of dojis. Like if a doji closes on top, it's like there's different names for each one, but just know a doji represents indecision within the market. You can find a lot of dojis in after hours because not a lot of trading goes on. So sometimes the price will just stay at the same spot the whole hour. Like this is a doji. So like these two candles, like the market, like no one knows what Boeing wants to do because of these two candles. That's why we're anticipating either a break up and then we would enter trades when it's above this line, or a break down and we enter puts when it's below this line.
Right.
Some other like triangle formations are Apple right now, in my opinion. You see this triangle forming. See it hit the bottom once, twice, 3 times, 4 times, kind of. I can redraw this.
Oh, it's one more thing I want to add to. A lot of people ask me, do I draw like my trend lines like in the middle, on the middle of candles? No, I go on the top of the wicks. All right, because if you don't want to do it in the middle of candles, because it's not a good indication on like if it could break or not, you want to go on the top of the wicks and draw your trend lines from there, not in the middle of the candle.
Yeah, because I like to also trade when it breaks. Actually, I'm not going to say that. But yeah, trend lines I do like from the tops of the wicks or the bottoms of the wicks. So said something in chat. I can't open up the chat. There it is. Anyone else questions right now?
Oh, I had a question about like, what do you guys do for back testing?
So with Thinkorswim, you could like back testing. You could just do this on demand feature where you just click it, and then like you get an account size of $100,000, fake of course, and you can go back to any date within you like however long you want until like 2010, I think it is. Yeah.
I thought it was 1900. That's what I thought it was.
It might be different for each stock. I'm not too sure.
Right.
But I mean that's a good amount of time. So you can go back to any date on any stock and just trade it however you wanted to. It's like you would find a strategy like that you like or like that you think may work, and then you will imply the like how you do that strategy within this time. So like one of my strategies is when the 9 crosses over the 21 or below, vice versa, you get into a trade. So this one, like where you see the 9 broke above the 21 on Amazon, the 1 hour chart. You see at the time it broke above, it was at about 1988, and the next morning it closed about $20, or it opened about $20 higher.
Yeah,
so like
I really recommend doing this. The whole going, because this is what I did this for like 2 months to actually learn what I wanted to learn and all that stuff, because you could look out of stock, right? On regular, like on your, so you open up like Thinkorswim and look at a chart without doing like this on-demand thing. You could look at it and say, "Oh, this is right," when it crosses. But it's in hindsight, everything is right in hindsight. So I really recommend you guys doing this, like, cause you can actually play and pause, like, so you can start from 9:30
Yeah.
and play and pause it, and then it would like create a simulation as if you're in the stock market. It's good because you can actually practice your things real time instead of, oh yeah, look at your chart and see that the move already happened, but you're already looking at your chart. You're like, oh, you see
Yeah.
it already. You know, everyone's right in hindsight. If you can actually practice that, you know, in real time, so you can like control your emotions and all that stuff, bro, you'll be golden, bro. It's easy as that.
I'm gonna go over the Coca-Cola chart and my reasoning getting into the swing trade. So as you can see here, well, what would you guys call this?
Ascending triangle. Oh.
In the
No.
middle?
Is it a double bottom?
No, this triangle right here, what I have drawn.
Ascending.
Yep.
Then
And this is an ascending triangle because first of all, there is a move, so you can consider it a pennant. There is a initial move, and this is the continuation of that move. This is just the consolidation between them. So I called out this trade, I think about midday or end of market. Let me see. Yeah, I called them out about midday, and I called them out about here. That's because the 4-hour candle was closing extremely bullish with a lot of volume, past a lot more than the past few days, as well as was breaking above this triangle's resistance, as well as other things like the TTM was squeezed, or TTM squeezes green. Stochastic slow was also green, and the 9 crossed above the 21 a few days ago for this. So this is just a continuation from my swing strategy, from like if you were to get a lucky enter at the exact break of the 9 to 21. I'm also gonna go over Starbucks. I put these in chat, but who knows how many people read them. You see here, this is a piece of resistance, right? Lots of resistance at this area, you know, gap down, whole bunch of times. After it touched it the second time, then I created this line, and then you see it struggle to break it a few times here. But then as soon as I saw this happen, you know, I signaled this morning for swings, got in it as a day trade, took a day of consolidation, and then continued the trend. And hopefully we see it continue all the way up to 90, because that would make me happy.
Yeah.
Any questions about the Starbucks or Coca-Cola chart? Or just like how to read
Alright.
charts in general?
I've been getting questions on like when you guys should take profits on different type of trades. So I actually did a video on that last Zoom. So if you guys go on like education or useful resources, it should be there. So if you guys want to watch that, it's a pretty good video.
There was someone in the beginning of the Zoom who had a question. If you want to ask those questions now, you can answer that now, or if you already asked those questions.
Oh, I think that was me.
Yeah.
All right. So, like, for a new trader, how much do you think is like a good amount to start investing in?
That was in the last Zoom too. So.
Yeah.
Oh, it was.
Yeah. If you watch that video, I did a whole thing how to manage like new traders, how to manage your accounts and all that stuff.
Okay. All right then. What's like the best time to like trade or like that volume and stuff like that?
So when we so what do we see? All right, so I don't know if you see, but always in the first 30 minutes of um of the market, that's when
Open.
first 30 minutes and like the last couple minutes of market open and close, that's where volume is the highest. So I don't trade those first 30 minutes. So I start to look at my I'm always looking at my phone, but I'm always looking to take trades at 10 o'clock because that's when the volume died down and it's easier to get into positions because you're not going to get faked out. You're not going to see big pumps or big dumps. So I say from like 9:45, no, like 9:50 to 10. After that, you would want to look to get into trades because we see, like for
Yeah.
instance, show them Roku. Show them what Roku does like every morning, our market
Yeah.
open. It's just
So
just pumps.
market. Yeah, straight pump. And then like I guess like here
That's,
you can decide like, okay, there's some red candles, like there's been some consolidation, like I'd like to get into this trade. Or like here, like a lot of people mostly got scared out of their calls on this day because it was just a very sideways action like the whole day. But then you see a continuation with Roku here.
but yeah, but so you would so the times are so we have 10 to like what 11:30, 12. Those are good like prime times for in the beginning. And then from
Yeah.
like 12 to like 2, I believe, is when lunch is. And then from 2 to 4, that's where the volume picks up. So from like 12 to 2, you can see that in some stocks the stock is really flat, it's not moving because the traders are at lunch.
Yeah.
But then from 2 to 4, that's when volume starts to pick up again. So from 10 to like 12 and from 2 to 4 are what I see are the best times for trading.
Yeah, so like for day trades, it'd probably be best to get into a trade at like 10 o'clock and either swing it or day trade it till 12 area, like that around that time. And for swing traders, it's probably best to get into positions around 2 to 3 o'clock or 2 to 4 o'clock and hold till tomorrow or whenever you're holding it till. Because also with swing trading, I personally I use the 4-hour a lot, and the first 4-hour candle of the day closes at 1 p.m. So like just waiting until 2, 3, or 4 just gives you a better idea of where the stock is going to go in the next day. And like remember, you can draw triangles on any chart. You can draw support and resistance on any chart. Like I seen this a few days ago. Saw CrowdStrike breaking out of this this like 112 area with this resistance line going through it. And what did we see the following days? We saw it close above this line with all right volume, better than the days before definitely. And then we saw it close above, and then we saw a nice pump up to 120, and then consolidation the next day, and then up to 121. I know Zarnak was in that. I was in a couple contracts of that too, which was nice. You can just find these pretty much anywhere. Like, this is when I called Facebook for that huge, like $16 day. I saw it breaking out of this triangle that I drew up. Right, one, touch the top, touch it again, broke out, held above on the. I gotta make it more. Held above on the hourly and 2-hourly and the rest, and we traded this. And then it continued the next day, but no one could have known that.
Any other questions, guys?
Is there any such thing as like too big of a triangle or like a triangle that covers too much time?
No,
There's a
like
triangle actually. I'm gonna
like
put it in the
Because
chat.
I was just looking at Netflix right now.
yeah,
The 4 hour.
this is what I'm looking at right now. Okay, Netflix 4-hour. So you can draw this as a triangle, like personally, and then this would just be the bottom line, this white line. Like in my opinion, that's how I would draw this triangle, if there was one. But if we're talking about larger time frame triangles, like this is my Netflix weekly triangle that I've had drawn for before 2020. And you see it touch these tops a whole bunch of times here. And as soon as we got this, this push above this price, we saw a move from about 390 to 450 the following, like the same week. And then we saw a resistance here at this area at about the 450 area. We tried to break it again, but it couldn't. And then this is also something else we like to trade. This is the breakout of that past resistance, right, of this area. And then the retest of the support that it now uses. And then it continues to trade. And remember, this is a $125 move in 2, 3, 4, 5, 6, 7, 8, 10 days. That's a lot of percentages. But yeah, triangles can be as big or as small as you'd like. You can take triangles on the 5-minute. Let me try and find. I know like all of the triangles that Zach drew are on the 5-minute.
Yeah, because I'm
Yeah,
strictly day trading.
Yeah.
I don't like swings. It make me scared.
So like that, you can consider that kind of a little channel, and then you see the break and the retest of the channel. But yeah, the higher the time frame, the larger the move, most of the time, because the more time is behind it and the more volume as well. Baba, this is another good
I was just about
triangle.
to ask about Baba, bro. I was gonna say, like, it looks like it wants to break out on the 4-hour, but I'm not sure. I wanted to see like what you think.
Yeah, so I mean, this was the past on Baba. Created this triangle, a whole bunch of consolidation between like 270 and like 250, 241. And it just bounced between there for a whole bunch of time. And as soon as we seen above this top band of the triangle, it was a huge jump. Personally, if I were to trade Baba, I would need it to be above the all-time high, because that's just how I trade. I trade the breakouts. I like to be above the high, above the last high with good volume.
But you could also draw a triangle on that too. On that.
Yeah, I was gonna say.
Yeah, right there.
There's a triangle forming.
You could draw that if you wanted to, and then you would wait. You would wait for it to break out, and then since you see that 292.64, you would wait. So you would wait for it to break out that triangle, right? And then you see that high of that the 292.64. You would wait to break that, because you could wait. You could trade the breakout, but then it would just get rejected at this line, right? If you didn't see that resistance line, you would have got messed up. So you would see the triangle. Okay, once it broke out the triangle, and then now you wait for it to break out your resistance line. Then you're just flying into virgin territory.
Yeah.
Can't be touched.
Wait,
so like,
can they just what's it called? If they trade the breakout, they can put their price target for the new high for the highs.
I mean, I like big.
But like,
I want the big move, so I would wait.
In this instance, a $3 move is not going to be like good enough for the potential loss of a $7 move.
Yeah.
Like there's no point of taking that trade, in my opinion. But if we break above this, we can break above. Say we hit like 293, and then you set your stop loss as like 292. Like that's a dollar move down as a stop loss for a potential, like, if you take like this into consideration, a potential like $10 move up.
And if you guys have times, go on YouTube and search up risks to reward setups. 'Cause I do a lot of those type of setups. It just teaches you how to look for better risk reward setups so you wouldn't get faked out like that. So if you guys have time, go on YouTube and search up risk reward setups and trading. Those are very good.
Beautiful.
Any other questions?
Let's see. Hold on a second.
Speak about Tatum real quick.
Remember, you guys can use the watch list that Kevin makes every morning for your pre-market high and lows.
If you guys want to know how I make the watch list for that every morning, on most stocks in there, there will be enough volume overnight to see a pre-market high and a pre-market low. And this is not a good example on Apple, but say I did Roku or Netflix, right? So we're just gonna say this day because it wasn't the biggest move for Netflix. I had my set put area at this line because it was the pre-market lows, and in how I trade, I wait until the first 15 minutes of the market to pass, and then I'll trade. And you see it hover around this area for the first 15 minutes. Then we see a nice break below and hold at 950. And if you were to scalp this, you would be in this like here, and then you'd probably be out anywhere from here. And that is about $10 move. Maybe $5 to $10 move in a couple minutes, which is nice. If you held it throughout the day, it's a larger move, but it's time decay, and day traders don't like to hold longer. Because day trading, you just get in and out, taking your profit when you can. But that happens with a lot of stocks. So like Microsoft, like this line would be considered the pre-market high. And within the first 15 minutes, it kind of hovered around it. And then it broke above at 950 area. Then it shot up from 223 to 230. Actually, Fab called this one out. Me and Fab were in this. And then look at how it rode the 9 up until the highs of the day. The blue line is the 9 EMA.
So like, would there ever be a time though where like you think it would be good to get in on like early morning volume, or like you just think like it's not worth it potentially? Because sometimes, bro, you be seeing them huge jumps.
Yeah.
And like
AMD is the perfect example for this.
Oh yeah.
Oh gosh, nah, that red candle.
So let me get. So.
Oh yeah, Microsoft was called out during live trading. So if you guys want,
oh that 2209 one.
Yeah, that was during live trading.
I signaled that actually like 6 o'clock in the morning. I was like, yo, Misfit calls above 2209. Get in that.
Yeah, so like
crazy.
This is the 1 minute chart on AMD, and I see it. I would set the pre-market high at 87.5, and we see in the pre-market in the first 2 minutes of the market, we saw open and break up to 87.7. Like that would be enough for me to get into a trade. But then you see, the first 15 minutes happen, and that falls right back down. Like I think I might have been in this. I think I might have. No, I don't think I was in that.
Nah.
But
we were talking about it in live trading. We didn't get into it.
But then you just see a reversal, and a lot of people, if you get in this, you'll be like, oh, okay, it won't go down too far. I'll just hold it throughout the day, and if you held it throughout the day, you would have lost the money that you earned because it didn't do anything.
Oh yeah, someone called out 85. It was gonna go down to 85, and it actually
did.
Yeah, and diamond hands that boys. You're gonna get
tough luck.
Oh, go to Zoom. Show Zoom. We'll have it Zoom.
Yeah, so like this is the Zoom 5-minute chart. Like a lot of people must have gotten into Zoom in the first 5 minutes because it had a super strong open. The 5-minute candle closed above yesterday's highs, and like in my opinion, that looks like a good trade. Like it has a good opening volume, but it didn't have the next candle. It went down more than the first candle. So like if you got into this trade at like anywhere at the highs, you would have lost a lot of the contract if you held it throughout the next 5 minutes. But yeah, Zoom does this a lot. Like it reached a high of 298.1 this day, and the next candle touched 291.22. Like the $7 move in a couple minutes. That's too much. So, in my opinion, this is not worth it to trade the morning volume.
Yeah, people taking profit from their swings.
Yeah, that's true. If anything, like what happened here is it broke above my pre-market high price, and then it retested that same area, as well as using the 9 as EMA. You can get in this as a trade. This is also a triangle. Like I like to get into trades when the candle closes above the previous candles, but I like to draw the lines as, the wicks. So in this case, I would use this as my entry price, get in here or here, and then ride the 9. Riding the 9 is also the same thing on the way down, until it breaks above. Get out. It's all the same. Except the opposite ways.
Yeah. Another question. The 21. I don't know if you guys. I know you guys mentioned it earlier, but what exactly did the 21 show again? Because I know we use the 9 to show especially for day trading, but the 21, what are we using that for again?
I mean, I just like to use it with the 9 because on this chart at least, you see it broke above the 9, but then it couldn't break above the 21. It's if you were super risky and you're I still think this is gonna go this way, you're and then you hold it until it breaks above the 21 or below the 21. It's just a second indicator of when it's just a second support line.
Okay.
It also works really well when the 9 crosses the 21 to signal a move.
Do you guys know what the EMAs in? Do you know what that signifies? Do you guys know
average,
that?
It's the average price movement over the last
over the
9.
Yeah. So yeah, they're just basically price averages. It's just a line average of the previous 9 and 21 days.
Yeah.
Of that certain stuff.
But it isn't technically days. It's just candles. So I'm pretty sure at least this 9 EMA is is showing the average price of the last 9 candles, whatever time frame you're looking at, because it's different. It's different on the 4-day. It's different on the 1 day. It's different on the 5-minute. So it just shows the last 9 candles of price into 1. The same with the 21, but the last 21 candles. That's what 21 follows it. Same with the 50 and the 200 if you use those.
Nice. So when the 9 and the 21 cross is showing a reversal of the trend, more or less.
Sometimes yes.
Yeah, it doesn't happen all the time though, because you'd have times where it'll cross and then it'll cross right back down again.
Back up, yeah.
Yeah.
Mm-hmm.
But it's just you don't, that's why I say it's not good to trade basically like solely off indicators because they're all lagging and they don't really show real time. So it's I just use indicators as confirmation into the trade I'm doing.
Yeah.
So don't just trade straight off indicators because you're gonna lose money.
Yeah. If anything, trade off
I
of
like that.
straight support and resistance and
Price
triangles.
action. Yeah, price action. And just you would use the price action and just use your indicators as confirmation on your trade.
Yeah. Like, oh, if the price action's good and then plus 2 of my indicators are also showing the same thing, like, oh, maybe it'll be a good trade.
Beautiful. That makes sense.
There are also patterns that I know we've talked about them a little bit in chat, like cup and handles. What was that nice cup and handle we saw? Was it Boeing? It was this Boeing, right? On the 1 hour.
Let me check in education. It's still in education.
Yeah, it's definitely this. I know exactly what day this was.
Oh yeah, it is BA.
Like,
on like 8-6 around that.
Let me see.
BA 4 hour around 8-6.
8-6. Yeah. So it's that. A big move up. It was this, right? Yeah, and then I signaled it in the morning, and then you signaled it a little bit after. You day traded it, and I think I swung it. And it mooned overnight. But yeah, there's candles, there's formations every day. This is kind of a cup and handle too, on cat that I saw, and I mean it played out good. I made profit on it. You see the cup here formed the, like a U shape, and then the handle is a channel down, and then you trade the breakout of the channel.
Yeah, but those are like more advanced patterns. But
Yeah.
the ones that we gave you guys today, the triangles, the channels, those are very basic. So if you guys can get that down, and then do more research on more chart patterns, and then it's gonna be easier. But we just showed you guys like the most common and simple.
Those also haven't happened the most throughout the day on any time frame, on any stock. Like a lot of the times when you see a stock running throughout the day, you will see a lot of like bull flags or a lot of bull pennants on the smaller time frames. So, like, can't really see anything there. I want to see it. Apple. Apple likes to run and make things like here, right? This is a triangle on Apple. And you see it ran from, as of now, 119 to 123. And as soon as it broke out of 123 area, had a little struggle and then pushed up to 125 area. So you can just see continuations within the day. Any questions about Thinkorswim, about trading, about triangles, about anything?
Speak about Tatum.
What?
You want to? So, can we go over like the Greeks real quick?
Oh yeah, I got you.
Possible?
Yeah. Because I got confused.
So, what stock are you guys comfortable looking at?
Use SPY. SPY is pretty.
SPY? Okay.
Yeah, just go on SPY.
So I'm gonna use next week's contract. Actually, the 4th is next week. So there are 5 Greeks, 3 of them that I use the most. There are 5. There is the delta, the gamma, the theta, What else is there? There's the RHO and the Vega. So the delta, say you buy this contract for SPY, the 351 call for this expiration date. The delta is if SPY at its current price of 350.58 goes up to 351.58, you will make the delta on as a profit. So this $250 contract will now be worth $300 when SPY is at 351.58, right? $1 up. The gamma measures the delta, right? So say you are now at SPY 351.58 and you still have this contract. The next dollar that SPY goes up, so when it goes up to 352.58, this gets added on to the delta. So the next that contract that was now 300 will be 356 when it goes up another dollar. The Vega, Vega I don't use too much, but I think the Vega measures the
time decay in a day. Like, so like on Fridays.
No, that's theta.
No, I'm talking about intraday. So let me give you an example. On Fridays, like if you're buying a 0-day expiration, so like say SPY goes up $1, right? And you make $50 off of that. But say SPY goes down 50 cents. If your Vega's like high, I believe, you can lose all that $50 just because it went down 50 cents. So that's why it's not good to play like weeklies, because you're gonna like, especially closer to Thursday and Friday, because even if the stock goes down a little bit, like a lot of your profit goes away. So the Vega is the how much you lose when the stock goes down from your like initial contract, if that makes sense. The Vega's hard to explain, but that's just like the gist of it.
I mean,
is it based off of implied volatility?
That's theta. Okay. So like.
So you. Oh, sorry. Finish what you saying.
So and then RHO, I don't pay attention to. Like, I don't think it matters much. I don't think the numbers aren't significant enough to care about what it means. And the theta is how much the option will go down if the price does not move a cent throughout the day, or like just like however much it loses throughout the day. So say this, right? We're gonna look at the same contract. This theta is negative 21.21. So say if SPY doesn't move at all by the end of the day, this contract will be worth $21 less than what you bought it for. And the theta will rise before earnings. So if you look at Zoom prices, you will see that the theta is extremely high, especially compared to the delta. It's about 3 times as much as the delta. So if you want to trade these options, you need Zoom to move at least $3 in your direction throughout the day to make money on that contract.
And then if you guys wait, like I know Zoom's earnings are this week. Like pay attention. Like today,
Monday.
Yeah, Monday in the money call for Zoom it's 1,700. Now if Zoom doesn't, if there's earnings don't do good and they drop down, see how IV crush you're gonna get on Zoom.
These will be like $600
less. It'll be like 300, bro.
Like it also, like, the implied volatility is 120%. And I say if you're swinging anything or if you're trading anything in general, a good implied volatility to look for is like anything below 50, in my opinion, is good.
But what if it's like negative 0.2178? How much that is?
What do you mean?
Like for Facebook, because I got a Facebook call for like next week.
Okay.
And then
Can you just tell me the the exact contract?
yeah, I got you.
Give the September 4th 302.5 call.
Yeah.
So yes, so with this contract, you see that the implied volatility is $50 or 50%, so it's not that bad. You see on Friday that it lost $1.77 in value.
Yeah.
And the theta, so each day you hold that contract, you're technically losing $60. But if it goes $2 in your direction, then you will break even on the contract for that day. Like, because the delta is 34, times that by 2 is a little over 60. But yeah, if Facebook doesn't move at all on Monday, which is unlikely, your contract will lose it will lose $60.
It lose $6 automatically.
60.
60.
Yeah, throughout the day. So like, a good way to look at this, like, in the morning, right? Your contract will be worth $420 at the open. And if Facebook doesn't move a cent all day, doesn't move up or down, throughout the day you will lose like $1 every whatever, like 6 hours divided by 60 is. You'll lose $1 every few minutes, pretty much, just holding it throughout the day. But if it goes up, you know, you make money, and you don't have to really care about the data as much.
All right, appreciate it. Thank you.
So, that's probably my last question. So, like, say, you know, tomorrow's Monday. Do you guys really recommend buying like same week expiration contracts, or you rather go at least another week out?
What are you trying to do with that contract? Are you trying to day trade it, or are you trying to swing it?
Like, what would be, you know, what's like the
so like
advantages for both?
So okay, so I'm a day trader, right? So I would buy weeklies on Monday and Tuesdays, but sometimes Wednesday. It depends how the contract is looking. But once it hits Thursday and Friday, I wouldn't buy that contract because of I believe the Vega, it's not too pretty. So if I'm day trading, I would do Mondays and Tuesdays. And if it gets like, say if I want to take a trade on a Wednesday or Thursday or Friday, I would look to go next week's expiration. But if you're swinging, you don't really want to go weekly or even the next week. You probably want to go 2 to 3 weeks out plus for swing trading.
I like using next week expiration if I'm using like the 1 hour or the like 2 hour chart. But if I'm using the 4 hour chart, I'll either go like 2 or 3 weeks out. And you know, if I'm using the weekly, or I opened up a Starbucks weekly, or I think it was, what's it called? It was October expiration, 95 calls, because my swing strategy is forming on my chart. So I think it's going to go up. And then that expires mid-October. So I have 2 months on that.
All right, and when we say weekly, guys, we mean like buying the contract and like going to trade option chain again, buying that contract on like the first week you can. So like since the next week, the end that Friday is September 4th. So if we're buying a weekly, we're buying a contract in the week of September 4th. So that's what we mean by that.
Yeah. And then next week you would be looking at September 11th, and then 2 weeks would be September 18th, and then so on and so forth.
Oh, go on SPY right quick. SPY options chain. SPY does this confusing thing where they have like 0 day trades, like the 0 expirations, like as a chain. So you gotta be careful of that and actually look at your calendar, because I get confused on that a lot. I buy the wrong option because I think the first one is a weekly, the second one is next week. But no, you guys gotta actually pay attention to that.
So yeah, SPY contracts expire on Monday, Wednesday, and Fridays. So You just gotta be careful because if you click on the first one, then you will buy a contract that expires the same day. So, and you don't want that if it's a Monday, Wednesday, or a Friday. But if you click the first one, you're getting either same day expiration or a next day expiration.
If you're swinging SPY, you know, you guys think probably like 2 weeks out is good.
Well, no, you just
There's
gotta.
so many dates.
Yeah, you just gotta find. You just gotta find the date. So like this September 11th is 2 weeks, right? Is next week's expiration. September 18th would be the next
Strike
week.
reports on the 11th.
Yeah, this week, and then the 11th is next week, and then the 18th is then following week after that. Just out of here.
Hello, yo.
Yo, what's up?
Yeah, real quick. Can you guys just define delta and gamma again?
Yeah. So the delta is the price that the contract moves per $1 of the underlying stock movement. So this contract that we looked at here, it has a delta of 50. So if SPY goes from 350.58 to 351.58, how much will it go up? Just according to the delta, it'll go up $50 according to the delta.
Oh, okay, yeah. And gamma.
And gamma, the next dollar. So it's already $1 up from your entry. The next dollar, it will move, or the gamma will add on to the delta, and it'll move that price. So say this gamma is 0.6. The next dollar SPY moves up will be 0.56.
Okay.
So instead of gaining $50, you'll gain $56 on the next move up.
All right, bet. Okay.
Anything else?
You guys covered like all my questions, so I'm good. I don't know about anybody else.
Wait, do you guys do these like every week? Cause it's like, yeah, like I didn't even know about this.
We used to do it every week, but then not a lot of people would show up. Only maybe 5 or 6 people show up every time. Half of them being staff members.
So you get like 2 or 3 people.
Yeah, and I don't know. It just wasn't it didn't get enough people, and it wasn't worth it at the time.
All right, I guess I don't do it every week, but I guess next time I do it, I'll be ready for that. I came in kind of late.
I think it's recorded, so
you guys want to know one so we can get in?
It.
So we can. Is there something you guys want to learn? Something for the next Zoom? If you guys want to learn, so we can get it ready for you guys.
Yeah, or
a topic.
If you want me to look at anything,
If you can you go over Robinhood as far as placing orders and just kind of running them through on how to place an order?
All right, I'll do that. Actually, I was meaning to do that for Thinkorswim and Robinhood, so I could do that for the next one. I'll show how to use Thinkorswim thoroughly and Robinhood thoroughly. So I'll do that.
All right, because I was planning on, if you guys didn't touch it, just give me host, and then whoever wants to stay and watch that, I can do it.
I mean, I can do that right now.
All right.
All right, but I gotta go though.
I'm recording, Kev.
Yeah, I'm gonna end the recording. But have a nice night, guys.
All right, my guy.
But I was thinking about something real